Well, it looks like, a lot of people talking about what are the major media saying. I was telling you about what the major media was saying about the equities and all that stuff. Well, guess what? Guess what? Goldman Sachs has issued warnings about the S&P and everything getting kind of like costly now. Costly. The PE ratios and everything are an indication. And we've known this for a while. But they're issuing a warning. But this is after they kind of said other things. But you gotta put it this way. If I'm playing a game, and I'm not. But say I was Goldman Sachs, and I'd have to coyly tell people kind of like what's happening, because then if something happens after I told them the opposite for so long, at least I'm covered, so I don't lose all my credibility. That's exactly what they're doing. That's exactly what they're doing. What the hell was that guy? Pastor Lindsey Williams says the elite have to tell you they have a code. They don't have a code. They don't have a code. It's a coy game. That's all it is. It's no code. It's a coy game. I told you. Yeah, maybe I whispered it to you, whatever, Either do this or else. I told you. I warned you. Anyway. But, the other thing is with Goldman, you got to look at what, besides what they say, what they actually do. What they've actually been doing is buying gold. Period. Now, I know a lot of people, they're asking me one question about, what do you do later on when silver and gold goes up? What do you do? Take fiat? And, my answer is, yeah. But the thing is, no business owns all fiat, right, as their main asset. They get another capital expenditure. But then they say, where to invest? I'm going to throw something out here for some food for thought later, because this is what I think. What's in a bubble mania right now? As long as you've got a garage or something or a warehouse to put this stuff in, I actually think it's a lot of these classic cars. They've been going up and up and up and up in value. You see Haggerty's and Barrett-Jackson out there. They're going up to these extreme prices. And, you see all this stuff all over the internet where these rust buckets cost all this money because Haggerty's or Barrett-Jackson says they cost this much money, so therefore this rust bucket is worth $4,000. It's got no floors in it, no engine, and all this other garbage, right? Well, that's because they're being traded between, rich people with for $100,000 or $50,000, and they're pouring all this money into that stuff, right? Just remember what happened also back during the 70s in the precious metals market. And also during the Arab oil embargo in the early 70s, too. You had the early 70s, say in 73 or whatever, and when the price of gas was going up, and what happened in 79 with the car dealerships when the precious metals were at the height, and they had the Iranian hostage crisis. Two different events I'm talking about. The Arab oil embargo was in the early 70s, and late 70s was the Iranian hostage crisis. Actually, a lot of people don't think of this shit because they're stupid. Well, they're not that stupid. I'm just telling you because, some people are asking me about this stuff. Where's one place you can put money into? This is another place. If you remember, I think they had the Superbird or whatever the hell it is they called it, the Dodge Daytona. They had the big wing on it and stuff like that. They were selling those for below dealer cost or something. They were sitting on a car lot a year later because nobody wanted them because the price of gas was going up. And now they're worth if you had one of those and you stored it away, it's worth 50 times what it was what you paid for it or something or more probably. And this is what I think what could possibly happen if you see the precious metals go up. It's going to happen. Oil, like I said, oil's going up, gold's going up, and silver's going up all at the same time. They're all going to pretty much run together. They're not going to be like playing day trader where, they go up exactly the same in unison and they have this perfect correlation. But if oil goes in a really strong, hard bull run, and I think it's going to super spike, which means it'll peak out, and then they'll get real serious about, hydrogen, natural gas, electric cars, hybrids, and reduce the and the price will drop. But when it super spikes, you're going to see gold and silver go up. And this is not going to be your only asset you'd want to buy. But I bet you the price of these classic cars is going to plummet like crazy. Somebody could have put, $50,000 or $100,000 of effort into a car, and they usually can't get the market money out of it anyway, even what they put into it. Watch what will happen to the price of these cars if gasoline, like these classic cars that eat a lot of gas up and stuff from the 60s and stuff like that in the early 70s or whatever. Watch what happens to the price of these cars if gasoline is $8 a gallon. I don't even care if it's a classic or not. People say, oh, it's always going to hold its value. It's like the same kind of garbage that real estate people used to believe. It's going to drop like a stone. Because if people need cash, they're going to need cash, they're going to sell, and that's what's going to happen. That's what's going to happen. That's where you might find a place to park some of your money. I don't know if I'm going to do that myself. I don't know. I might. Who the hell knows? I might, but that's an idea. Because if you look back historically, what happened during the precious metal run-ups, the oil went up. A lot of these cars were like dropping in price because they ate up gasoline and stuff like that. You could probably just you could go into a even a new dealership or something like that, and some of the gas guzzlers out there that are high tech, that are loaded up, just hold on to them for freaking so many years, and they're probably going to be worth more. I wouldn't necessarily do that, but I would do that with the classics. I would look around. You're going to see the price drop on it. I think it's actually in a bubble mania phase, actually, even though it's been going on for many years. Could very well be. Could very well be. So basically, you're basically going to be paying like 25 cents an hour for every hour of labor that went into these cars if you're getting it at a really good price. So that's something else to think about. Now, the jobs report came out in December, was horrible. I don't want to laugh about that. I think it was 77,000. They expected to add 200-something thousand jobs to the economy. It was 77,000. Now with Janet Yellen taper, now they're saying, yeah, she's going to taper faster. I don't know, maybe. But if they do QE further, it doesn't really cause inflation right away, because QE means basically it's a bond buying program, and if they're going to have to keep buying the bonds, because China's not buying the bonds, so this taper is bullshit anyway. We all know that. But as far as them saying that they're going to taper, well, I don't think they will. I don't think they actually will. I don't think they actually will. You heard that from me so many times, but I don't think they actually will. But the interesting thing is, if you're in the equities right now, except the miners, Goldman-Sachs is already warning. But you got to remember, Goldman-Sachs never warned about this until just, within the last day or something like that, or today. But they've been buying gold. They've been buying gold physically, despite all the rhetoric they said about the stock markets and stuff going up. They have been buying gold for months and months and months and months. Ever since it dropped back in April, they've been buying. They've been buying. So, now they're giving you a coy little warning about, yeah, it's getting kind of, pricey and cost, it's getting a little kind of costly to buy stocks right now. So they're covered. They're covered. So anyway, that's a little bit of a common sense update. But, if you're thinking outside the box of, like, say a few years down the road, I think the actual blow off top, I think we're going to have, I don't even know this for a fact. It depends on how fast things move. But if silver and gold and oil gets legs like crazy in 2014, and it really gets crazy gains, it's going to have another reset before it really makes up its final run. This isn't. I don't think this is it just yet, where it's coming up. Now, also, I saw in the headlines today there's just more rocket attacks on Israel from Gaza or some guy. And there's going to be retaliatory attacks coming up and stuff like that. I've been hearing this news for years and years and years, but, the situation in the Middle East actually is the key. It's one of the major keys. That's going to be, if there's a catalyst that's actually going to set off precious metals prices and gold going way the hell up, it's going to be real serious problems in the Middle East. Obviously, oil is going to be the first thing that really rockets ahead, and gold. And then you'll see silver follow for sure, and it'll catch up and surpass them. But like I said, if it gets up to some, say for instance, silver does go up to $200 an ounce. Or let's say in 2017, it's several $100s an ounce when it hits the absolute bubble phase. And there's a war going on in the Middle East, and China's maybe trying to do something in, move on areas in oil in the Pacific Ocean on the Spratly Islands or something like that. You may see the retail price of gasoline at $8 a gallon. And there's going to be a major liquidity crunch amongst the average consumer. Anybody who's got, you may see a lot of these classic cars being sold for a fraction of the price they're going for right now. That's it. That's thinking outside the box. That's thinking outside the box, big time. And if you want to make a non-electronic trade, for that, and then in the future, you could definitely do that. So if you get my drift on that, you could definitely do that. You understand? Because you can actually make a trade in the future for something else plus cash, and you know what I'm talking about, right? Correct? Correct? With something like that. But the problem actually is storage. But that's another thing to think outside the box. If you have actually warehouse space or anything like that, you put a dozen of them in there and you're all set. Insure them up to the hilt real cheap. Insurance is very cheap on that type of stuff. Anything goes wrong, whatever. Hey, you got, whatever, your $2 million or whatever the hell it is. So that's the way it works. But do not expect the entire paper economy to fall apart completely. There's some of these things they predict out here are ludicrous. There's always going to be trade. There's always going to be commerce. There's going to always be, activity going on. And there's a reason we use paper and electronic types of transactions, because they're convenient. Doesn't mean they themselves aren't the actual worth of the transaction. They themselves are the representation of something else that is the actual transaction. If I sign a piece of paper and it's for something and you got something or whatever the hell it is, we know it's not the paper that's involved, right? And so, there may be a currency crisis, but as far as everything on pieces of paper going down, forget about that kind of crap. That's ludicrous. But actually, Warren Buffett has warned us, beware of paper currencies. Okay? Paper currencies specifically. Paper assets is one thing. Paper currencies is another thing. In other words, if you have a piece of paper and it says you own this product or whatever the hell it is, we know it's the product. We know it's the product. A currency is backed by the government. So, with all the debt and everything that the governments are in, that type of paper could be the problem. It's almost like having an asset that you have a paper to that has all these liens on it or something like that. And that's basically what's going on with the government debt. So I don't like what some of these. So that's what I really had a problem with. I'll say it specifically when Pastor Lindsey Williams says everything on paper is going down. That's ludicrous. It's totally ludicrous. And no elite guy ever said that. If he's freaking even listened to, if he said something, he didn't say it like that. In other words, if I had this acid here, Kitty Temptations for Rocky Caesar up there, he's looking at it. If I had this and I had a piece of paper that represented this cat food, and there was a lien against this cat food, and this cat food was in debt for all its liens and stuff like that, then that piece of paper that I had holding the acid of cat food would be worthless. But if I have a piece of paper, and this is free and clear, and it says I own this cat food, well, the piece of paper is backed up by cat food, if you want to put it that way. So, if you could just, that's what I'm saying, is everything on paper is not going down. Crying out loud. Anyway, 101 economics, right? But anyway, just, you take hold of my suggestion about some of this stuff with the classic cars and stuff like that. I don't know if I do that. 1950 Mercury, driving around too. What the hell? I mean, I'd probably do something like that if I got really insane gains on metals and stuff like that. You know, if there's some, I think it's a waste of money to buy these things because I think they're ridiculously overpriced. But you know, if you see it go like, you know, they're ridiculously overpriced and here silver's over, you know, way underpriced. If it goes this way, you might want to put a little bit into that. Also, you're probably going to see real estate drop like a stone too, if there's a real cash crunch on a lot of stuff. Because in Germany, well, it's not going to go this extreme, but it was a whole city block and a whole town was you could buy it with 1 ounce of gold. That crazy. So you know, you probably definitely want it. Most if the real estate dropped a lot, I don't know how much it's going to drop. Like it depends on what it is. Because something like farmland is not going to drop, you know, in a crisis economy like that. Farmland wouldn't. But, you know, but actually, if you look at it today, maybe farmland might be the only area of real estate that goes up, you know, in the future. So these are little ideas to put out there that for the planners. But in the future, if you're an average person, you got, you know, so many ounces of silver, whatever the hell you got, you might be able to buy. You know, one of these $50,000 classic cars for, you know, $8,000 in the future or something like that, and that's going to require, I don't know, a roll of silver coins, right? You know, when Brother John F. talks about a roll of silver coins buying you a car, you might be able to get one of those classic cars like that. Maybe not a new car. I think you might, you know, I remember him saying that, and I thought that was ludicrous, but I started thinking a little bit more because the classic cars are like toys, basically. They're non-essentials. They're hobbies. And they're gas guzzlers. So if they go way the hell up and the price of gas goes to $8 a gallon, you know, they might not be that desirable to hold, especially if there's a cash crunch. So you might be able to get something like that for a roll of freaking silver. A roll of silver at the extreme. So think about that. I think that's a good tip that, you know, the average Joe might be watching out. I mean, talking about their average Joe right there, watching out for in the future. Because I have seen these things happen in the 70s and early 70s and the late 70s too. It happened. And that's where we had, you know, the prices of metals spike. We had the oil spike during the oil embargo, gold spiked. You know, that's what gold is, basically silver spiked, not gold, but it was Nixon took it off the gold standard. Then in the late 70s it spiked. And I remember what was going on the opposite with the cars. They dropped like this. But the classic cars, whoa, holy smokes, they dropped off a cliff. They dropped off a cliff. So that might be something to think about for the average Joe. So, you know, like I said, I think outside the box. What you listen to when you listen to me, you don't listen to like this typical average financial advisor. Just keep that in mind. You know, keep that like a little rock gemstone in the back of your mind, because it's going to take some years, but that'll come up. That opportunity will come up. And investing requires you to be patient like a cat. Right there, Rocky Caesar. I don't know, I'm thinking about calling him Rocky instead of Caesar, because he likes to... He's a lover and a fighter. Anyway, right, dude? You swat sometimes, and sometimes you sniff.